Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst host. Today we're diving deep into SoFi Technologies, a fintech stock that's recently seen a sharp pullback amid conflicting narratives, short selling, and market jitters. I want to give you my real view, backed by numbers and facts. Is SoFi a good buy today, and where could it be headed next? If you're short on time, here's the quick takeaway. The recent pullback is normal, healthy even, and we should expect a strong rally ahead. SoFi is uniquely positioned to benefit from three game-changing factors in fintech: blockchain and crypto re-entry, private market fund offerings, and the launch of Level 1 options trading. Let's break these down. First, the recent pullback took SoFi's valuation back to about a $30 billion market cap after briefly surpassing that number. In my previous analysis, I projected this range as a reasonable band for the stock, so the market is just correcting to that expected level. From a 1-month perspective, SoFi's stock is still up about 3%. Over 6 months, it's roughly doubled. So despite recent volatility, the overall trajectory is strong. Now the stock is consolidating, basing at the $26 level, setting up for a potential next leg up. Let's talk about the most exciting growth driver, options trading. In September 2025, SoFi launched commission-free Level 1 options trading, allowing users to write covered calls and cash-secured puts. This moves SoFi into direct competition with Robinhood on options, one of the most lucrative segments of retail trading. Unlike traditional brokers, SoFi plans to capture revenue by collecting the spread on trades and creating a marketplace for options contracts, similar to how Uber connects drivers and riders. This platform model has strong network effects. More traders attract more liquidity, improving execution, and attracting more users. SoFi's options offering is expected to grow rapidly, with expansion plans including IRA options trading, eventually adding zero-day expiration contracts, increasing user engagement and revenue. Next up is SoFi's new blockchain and crypto strategy. After pausing crypto services, SoFi re-entered the market with a blockchain-based international remittance service, partnering with Lightspark to facilitate cross-border transfers from USD to BTC and local currencies. Starting with Mexico, this taps a huge market of unbanked and underbanked consumers reliant on remittances. Crypto integration not only opens new revenue streams but future-proofs SoFi against fiat currency pressures as global economic contingencies shift toward digital assets. Finally, SoFi's private market funds offering is a massive catalyst. SoFi started allowing retail investors to access private market funds backing names like OpenAI and SpaceX with low minimums around $10. This democratizes venture and growth equity exposure previously available only to accredited investors. Such innovation strengthens customer acquisition and retention by broadening product mix and tapping into the explosive interest in tech startups. Now let's look at some numbers. SoFi currently trades around $27 per share with a market cap near $33 billion. The trailing 12-month earnings per share hover around 0.5, placing the forward PE multiple at roughly 54.6 times earnings. This looks high on the face, but factor in expected rapid revenue growth over 25% year-on-year and emerging revenue streams, and the premium becomes more understandable. Trading volume is healthy, averaging over 70 million shares daily, ensuring strong liquidity. From a technical perspective, recent price action shows a short-term pullback from the mid-30s into the high 20s, a classic correction in a strong trend, setting a potential entry point. One factor that added temporary selling pressure was a sizable insider sale. Magdalena Yaselli, SoFi's board director, sold about 87,000 shares earlier this year. While headline grabbing, she still holds around 289,000 shares, signaling confidence. Insider sales are normal profit-taking events, not necessarily negative signals. We've seen similar patterns in many growth companies as early investors diversify gains. SoFi's business model is built around a diversified financial matrix, lending products like student and home loans, credit cards, investing services, crypto, and now options, trading, and private market funds. Customer acquisition remains a core focus, fueled by strong referral programs and digital marketing strategies, including search engine optimization, SEO, to capture organically motivated investors. To sum it up, SoFi is not just a fintech lender, not just a trading app. It's building an ecosystem combining consumer finance, wealth management, crypto innovation, and capital markets access. Its emerging options trading business taps a lucrative segment, crypto remittance opens new revenue streams, and private funds positioning gives it a unique edge to attract new users. The recent pullback is a healthy correction, and longer-term SoFi stock is positioned for substantial growth. I believe $50 per share is achievable within 12 to 24 months, depending on execution and market conditions. If you're interested in high-growth fintech exposure, SoFi offers a compelling combination of innovation, scale, and diversification. As always, be mindful of regulation, competition, and maintaining financial discipline. I personally continue to watch SoFi closely and trade it regularly in my portfolio and community. Thanks for tuning in. If this deep dive helped you, please hit like, subscribe, and comment your thoughts or questions. I'll cover competitor analysis like Robinhood soon, so stay tuned. Remember, investing involves risk, and this is not financial advice. Always do your own research. See you next time.